Stove Kraft joining us on the show. Mr. Gandhi, hi, morning. Thanks for your time. We understand that quarter three was a challenging quarter for you with a drop across the top and the bottom line. If you could help us understand how much of this was contributed to by a fall in exports versus domestic demand?
Yeah, on the domestic side, good morning. Domestic side, we had a good third quarter, but it was different compared to the previous third quarter. This Diwali was little early, so the seasonal demand was captured in the second quarter. There's definitely a challenge with the exports side not growing, and there was a drop in the exports revenue, which contributed to a softer third quarter. The export side is coming back to its normal, and revenue side demand is growing very fast. So we are seeing good demand now. The third quarter definitely was a little dampener.
Also exports, because they made up 3.5% of the total top line, while historically, you've known to have that number closer to 12%. Now that we have clarity on US tariffs and trade deals, and multiple other economies as well have also been signed up in terms of FTAs, do you sense that export business is coming back to strength? And by when can we see a meaningful turnaround?
So we are back to that 12% contribution to our revenues from exports, and we see it growing from here. We are already started seeing good growth on exports in this quarter itself, but then these are planned buys, and so it will take some time. But then we see very good possibilities of high growth in exports back.
Okay, so while that's the outlook on your exports, let's talk about the revenue growth. You had earlier guided for revenue growth to be above 15%. Margins were guided to be above 11% as well. On the back of the quarter three performance, are you still on track to double your revenue in the next 4 to 5 years? While that is slightly long term, talk to us about if you're seeing the improvement on both of these metrics, and by when will the margin level come back to 15%?
So we will definitely end the year on a double-digit growth in spite of subdued third quarter on exports. Overall, as a company, we will still be able to grow on double-digit. We are seeing good growth on revenues. Currently there is a pressure on the input costs, both because of metals and the import. The CNY cost going up. So on imports and on metals, there is a pressure, input pressure, while we generally pass it on to the consumer, but there is always a lag. So there is a pressure on that. But we are able to be very close to that 11% still. We believe that we may not be able to cross that 11%, but we'll be closer to that. And now going forward, as our revenues grow and we are fully capitalized for the high growth and all the costs are built in, so that operational leverage is set in, all future growth will contribute both to increased EBITDA and increased bottom line.
Interesting. So let's talk about Pigeon. The aim was to reach the 500 EBOs by FY27. When do you think you will hit this guidance?
Yeah, we are on track. There is a very strong pipeline of signing both on the real estate and the franchises. So we are on track to the guidance of 500 stores by if not the financial year 27, maybe a quarter. But we are definitely in the year 27, we are on track to the 500 stores.
And while we're talking about Pigeon, Mr. Gandhi, quarter three has seen massive shave off in cooktops and cookware categories both. What has led to such a sharp drop in these volumes, and what's your outlook on the recovery here?
Yeah, there were some input challenges. We have addressed them, as I earlier said. On revenue side, there is good growth. So you'll see a better quarter, which will actually set right the whole year. We'll be able to end the year with a double-digit growth in spite of the setback on the third quarter.
Okay, and you've tied up with IKEA. It's been about a year from with that partnership. How are the operations shaping up on that front, and will we start seeing revenues trickling in from this deal within this quarter itself?
No. So we are fully ready. The plant is ready. The approvals are almost in place. So revenues will start from the beginning of the next year. So right from April, we'll start supplies.
Okay, and lastly, talk to us about your debt picture. What's the debt position looking like? Are you looking at being debt-free anytime this soon? What could the timeline over there be?
With strong free cash flows and our internally funded capex, large capex coming to an end, we are approaching a year. The year ahead of us is both being debt free and having a good free cash flow.
Speaking with you, thank you so much for your time today on ET Now.
Thank you.